Alex, like I don't know about in your region, but here in GTA, there's a very common concept is like house hacking. Even for the first time home buyers, they what they try to do is like buy a home and maybe give half a portion, like a basement, to some tenants and try to like get the mortgage covered from like from them. So just for that perspective, I just really want to ask here is that if some client came to you and they are trying to buy their first time property, like as an investment property, but they maybe are overestimating the returns from it. How you think like someone can identify correctly that how much they're gonna get from that home, from their tenants, and in the long run, are they like making profits or they are just getting by? What you say?
I think you always need to use conservative numbers. And for instance, that's why I use 3% as passive appreciation. So passive appreciation being how much the market's going to rise. With rents, take the lower end of the rents. Let's just say you think you can rent it for between 2,000 and 2,400. Use 2,000 as your base number, right? Because if you get more, that's fantastic. But in the worst case scenario, we want to make sure that you're still being profitable. Now, the big thing, again, with the Greater Vancouver area and the Greater Toronto area, is it's very hard to cash flow a property. So to be cash flow positive, meaning that your rental income is more than your expenses. Because in our markets, the greatest source of ROI is going to be appreciation. Mm-hmm. But that doesn't mean you shouldn't purchase a property that doesn't have positive cash flow, because it will at some point later on. But we just have to take into account it should be very close to neutral or even just slightly negative. But we have to take all those factors into account to say, what is our actual ROI? It's not just, if we're having to pay $100, $200 a month into that property, that may not be a bad thing if that property is going up by 3% a year, if someone else is paying down our mortgage and there's all these other factors. So again, in terms of what you're talking about with house hacking, fantastic strategy. I think it can be one of the best things, again, as a first-time buyer to get into the market. Now, there's a few things we have to consider there. So if you were thinking of it in the sense of buying a condo and renting out a room, you can't use that towards your mortgage qualification, but you can obviously use that to put towards your mortgage payments. But if it actually has a suite in it, like a house with a suite, we can put that towards your mortgage payments. Now, for example, here, that's the hottest market, a detached single family home with a basement suite. And for us, again, specifically in the kind of under $1.3 million. Now, that's not going to be applicable for most first-time home buyers, but people are getting, on average, maybe $200,000 in extra mortgage qualification from the potential rental income, right? So it's a very attractive product to most people. They want to have that tenant in the basement, or they might live in the basement and rent out the upstairs, right? So again, I think in our areas, it is very difficult to get it to line up the way that all these like investors and gurus say. But you just have to run the numbers, again, be conservative with your estimates, and just, again, speak with professionals to get their advice on each situation.
Good talk, Alex. Now I really like, this is very important question, like one of my own question, like you can say I wanted to ask. You think like there is a way first time home buyers can save money, a lot of money during the negotiation or maybe transaction, but that way or that method is not most known as, like people don't know about it. You think like there's some kind of ways people can use to save a lot of money from for their first property
that people aren't aware of? So there's a couple of things to consider here. Number one is the current state of the market. So I would say, unfortunately, right now, it's very difficult to negotiate the same sorts of things we could do in a buyer's market because we're in such a seller's market. Yeah. Now, I know you guys are probably seeing some of the same activity, but if you're going into a home that has 30 other offers, you don't necessarily have the ability to, nitpick all these little things and try and get some money back. Whereas in a buyer's market, maybe homes have been sitting on the market for a longer period of time, or they're just clearly overpriced. You may be able to negotiate a better deal, or have the seller make some renovations or fix-ups that you find wrong with the property. Well, that's not necessarily applicable to a lot of the homes we're seeing at this time. But I guess some of the things that people may not be aware of, let's say, are some of the first-time home buyers programs. One of those being property transfer tax. Now, I believe you guys call it land transfer tax. And so as a first-time buyer, if the property's under $500,000, you're actually exempt, and up to $525,000, you're partially exempt. And now what those usually are is it's 1% on the first 200,000, and then 2% up to $1 million, I believe. Or is it 2 million? It's 2 million, sorry. So it only really applicable within that $500,000 range anyways, but that saves you up to $8,000 right there, right? So that's something you consider as part of your closing costs or things of that nature that you actually don't have to pay as a first-time home buyer. Now, on new construction, it doesn't matter if you're a first-time home buyer or not, you actually get the same exemption up to $750,000.
Interesting. Okay.
So, and which kind of leads me into my next point is where I'm seeing some of the potential opportunities right now. So in the resale market, it's just been absolutely insane. Again, with the detached, yeah, we might be seeing 30 plus offers on very attractive properties. Townhomes or semi-detached, you know, it could be between 10 and 15. Condos have not quite caught up yet. But I think that is the next big opportunity, because typically the detached market, the attached market, or specifically condos, kind of trails behind it, but they typically follow the same patterns. So it's going to reach a point, and as well with the immigration and investors coming back into the market, that condos are also going to see a run as well. Now, I believe, again, in the Toronto market, that I know condos are down pretty significantly over the past year, 10% or so. Don't quote me on that. But I'm thinking that people should be trying to get into, if they're trying to get into condos, now is the time. Because if you get into the situation where you're dealing with 5, 6, 7, 8 other offers, it's going to push that prices higher and higher and higher. And now the other side of that, where I'm really, really seeing the opportunities, is assignments. So I'm not sure if you're familiar with assignments, but what an assignment is let's say we have a pre-sale project. So someone bought a pre-sale in 2018 and it's not going to be done until 2021. Mm-hmm. Now, let's just say they paid $400,000 at the time or something like that. Now it's coming up to the time where it's actually going to be completed. They're selling their rights to that contract, to that unit, to another consumer. Now, what I'm seeing there is they may have, it may be more, or more than likely is more than what they originally paid. Not in all cases, but there's some negotiation room there, as well as the fact that prices have already appreciated. So it's more in line with today's prices than previously. So instead of having to get into these bidding wars, you can go in, actually have a bit more selection, get a brand new property for a more reasonable price. And now there's also the other side of the coin where people try and use this as an investment strategy, and sometimes it doesn't work out. So you don't actually have to qualify for your mortgage with a pre-sale until completion. So as long as you have that down payment, that person in 2018, they may have just put down, let's just say $40,000, 10%, but not been able to qualify for the mortgage. Maybe they're a student, maybe they, you know, got a different job. Now that the time comes, their whole plan was to assign that contract, but maybe they're having trouble doing so. So they may be able to give it to you at a discount, because if they don't, you know, sell that contract, they're actually going to be in major legal trouble because they're financially obligated to complete on that contract. So again, this isn't every situation, but I think we're going to start seeing these come up more and more. And again, that's just having a real estate professional help you out, look for these types of deals. I've noticed they don't show up on some of the primary sites as much. So I think, I don't know, we use rew.ca or realtor.ca are two of the bigger ones. And yeah, sometimes these sorts of deals aren't showing up there. So again, get in contact with a local real estate professional that may be able to help you understand these deals, because they are a bit more complex. But I do think there is some great opportunity there.
Yeah,